Hey, everybody. Welcome to This Week in Pre-IPO Stocks podcast. With me, I got Clint Sorensen, Chief Investment Officer at Wellshield, an outsourced CIO and investment research company. Nick Fusco, CEO of PM Insights, a pre-IPO secondary market pricing company. And Evan Cohen, founder and Chief Operating Officer of WithVincent.com. It's a media company focused on alternative investments. All right, fellas. So about a week ago, Anthropic announced that they got $4 billion from Amazon. The valuation wasn't announced, but there's some buzz that this might be a convertible that goes into this next round that they're trying to close at $40 billion, right? Anthropic did $18 billion round in January. The secondary market's at like $27 billion right now. You got Amazon has an $8 billion stake. What else is important? They're projected to do 2.7 cash burn. So here's my thing. Anthropic, like, everything I'm reading, everything that people are talking about, Anthropic's like the clear number 2 to OpenAI. That's what I'm reading. Okay, that's good.
We already got it. I like it more. I'm putting it to number one for us.
Okay, so here's the thing. So even if Anthropic's got a $40 billion valuation, if OpenAI is at 157, like the revenue's not there for Anthropic yet. But do you think Anthropic's got potential to catch up to OpenAI? Like, what needs to happen? Right, Nick, go ahead. I know you sound like you have strong opinions on this one. Fire away, man.
We're really enjoying the use of Anthropic in-house. I just think it's a high-quality service. It's definitely differentiated from OpenAI. They're doing some of the right moves. I mean, I think Clint pointed out Anthropic's able to partner with Google to go through any sort of Google Doc, Google Sheet, etc. If they're able to button up a lot of those different relationships in ways that OpenAI was not able to. Yeah. You know, they're doing everything right the first time rather than kind of unwinding and figuring it out again as I see OpenAI. This could be the exact same dynamic of Yahoo is the number one search engine. And everyone's like, yeah, who's coming for them? And then Google blew them out of the water. Right. So I do think there's a case here where if they play their cards right in terms of data ingestion, data partnerships, they can leapfrog over OpenAI.
Right. Evan, what do you think? Well, Clint, we'll let you back clean up here, man. What do you think, Evan?
I think I agree with Nick that I think that Anthropic, I enjoy using Claude more than I enjoy using ChatGPT or OpenAI's products.
Okay.
I think that OpenAI has commanded the valuation that it has for a number of reasons. But I believe the biggest one is the leverage that it gets from Microsoft, right? Like, it's just that you got a multi-trillion-dollar backer with hundreds of millions of customers and all of the suite that Microsoft offers, the ability to add AI to that B2B business. Again, Microsoft really is B2B, the sales channel, the functionality. There's just a much bigger opportunity there. I think Anthropic has done an excellent job with their product. I believe that Amazon's an excellent partner for them. Obviously, AWS is great infrastructure for the rest of the internet and great for Anthropic, but they don't have the B2B sales channel that Microsoft does. So OpenAI really does have an advantage when it comes to selling their software. And I don't know if the Yahoo to Google comparison is the same, because I believe Google's technology was substantially better. I don't think OpenAI's technology is bad by any means. And I believe that the whole space is evolving so quickly that it's hard to say who's the winner and the loser, because it seems like every other month there's a new product that comes out that changes the rankings. But I honestly, like, what I did hear though, and I'm curious, Aaron, if you have any details, is I heard that the round was entirely taken up by Amazon, as in like they weren't allowing new investors to participate. So that's a really strong signal, in my opinion, for believing in Anthropic and the way that they want to integrate it with Amazon and its technology stack.
Yeah. So I don't know enough, Evan, to say if Amazon took up the whole thing. What I do know though is that the secondary market's like locked up right now. Everybody's waiting until this this new round gets announced, right? Like the valuation gets announced, because there's a ton of people looking to sell. But no one wants to do anything until this thing like pulls through and like the new valuation gets posted, right? So I don't
Got
know.
it.
But so Clint, let me ask you this, man. So OpenAI's got this huge lead, I think, on direct to consumer. They got like hundreds of millions of people, or at least 100 million people using ChatGPT direct. I don't think Anthropic, I don't know if I have a number from Anthropic on how much direct is, but to maybe Nick's point, is it whoever's going to win on the business side, the B2B side, Is that going to be the kind of the big winner in the long run? So maybe that's Anthropic's opportunity to kind of catch up and surpass. What do you think?
Yeah, I don't think they catch them. And here's ultimately why. I think they're both. Nick made great points about the usability of Anthropic and how great the platform is, and I do think that they will end up being a feature of Amazon. And I think that's going to be its best use case, right? This comes down to platforms. It comes down to data. The platforms have the data. OpenAI has the clear B2B advantage as it relates to Microsoft and being an enterprise operating system, right? A feature of an enterprise operating system, end to end too, because that's what, Microsoft really dominates. Will Amazon leverage Anthropic or cloud or whatever and end up creating a pretty unique offering for businesses that leverage Amazon as their marketplace? Sure. Will there also be a consumer application from it? Sure. I see a lot of use cases, but I think I think the shift is going to be shifting from thinking of these LLM models as platforms and starting to think of them as features on broader platforms that already have data, because that's what this is going to come down to. And I think the clear advantage for B2B is actually in favor, to Evan's point, in favor of OpenAI.
Okay, so one last question for you, Clint. So which one do you think has a better potential to go to 3x? So like, is an Anthropic at 40 billion, so that would be $120 billion company, would be 3x, or OpenAI at 157 to 45? Okay, so that I think is an interesting point too, right? So like one answer, if you say like, hey, who's going to have the biggest market cap in the long run versus like which one's the actual better investment, right? At this point in time, those are like two, different questions. So yeah, I'm kind of there with you. I'm kind of there with you as well. All right, let's talk AI apps. All right, fellas. So we talk about AI infrastructure that's like chips and data centers and data management companies. We talk about like the large language models, or I call them AI platforms. So like OpenAI, Anthropic, like the ones we just talked about. Then there's AI apps, which I think maybe we'll start here. Do you think AI apps? So that's like 11 Labs, just to call one out. Like 11 Labs, you put like a YouTube link into 11 Labs. It will take your voice and translate it to like 7 or 8 different other languages. You just pick one, and it's like perfect. I've had to send it to a couple of my foreign speaking buddies. It's great translation. It's your voice inflection. That's an AI app, right? That's one example. So do you think AI apps are going to be an interesting investment opportunity? Maybe I'll just kind of open that up. All right. So, strong opinions. All right, let her rip. Good.
Okay.
Fire away.
Yeah.
What do you got?
Fast to rise, fast to fizzle out, right? As soon as essentially what you're doing is just building a layer on top, a feature layer on top of an LLM model. And ultimately the LLM model is just going to create an agent to replace it long term. So I think as OpenAI, especially as they start to launch these agents, there's going to be an agent for absolutely everything. And it comes down to the model and what they want to restrict and open up from an API perspective to these application layers. And that's going to be a conscious essentially someone else is responsible for your existence if you think this is a business. And that someone else is going to be that LLM platform.
Okay, that's cool. That's interesting. Okay. Evan, go ahead. I see you rocking back and forth in your chair.
Yeah,
good. Let her rip.
I know I don't often disagree so vehemently with Clint, but I totally disagree. And I'll give you the parallel that I originally like. So I remember when the iPhone came out, the iPhone came out, and then the year after they launched the App Store, and I thought it was such a stupid thing. I'm like, what kind of person is going to want to download a bunch of apps for every single website they use? That's so silly.
Fair.
We have a web browser. And then all of a sudden these apps came out, and they built unique experiences that were device specific, that were much better than using the web interface. And so I think that the AI app, I think that there's definitely a place for AI apps. I believe every app or service or digital service will have some sort of AI component for efficiency and leverage.
Yeah.
And I believe there's a massive opportunity there. Now, will they be powered by LLMs? Absolutely. But the rest of the internet's already powered by AWS and Azure and Google. So I'm not saying that there's going to be infrastructure. And we've always said that the LLMs are the picks and shovels, but there are going to be massive businesses to be built that are AI centric apps. And I'm thinking the ones I think about are tax servicing, legal, medical research, things that are, I believe, are systematic businesses that have a very clear playbook. Everybody needs to do them, and you can automate a lot of that with some logic. We already have a lot of the web is already like that today. Hey, go to this website, fill out this form, question 1, question 2, question 3, click a button, calculate, done. Like that can be automated, and I believe there's gonna be a massive business for that.
Right, Nick, come on, tiebreaker. What do you think?
I'll agree with Clint on the fickleness of the app user, but I think you're going to have to dig through a lot of muck to get the right app, right? Because if you came in hot and you said, for my social media, I want to use MySpace, it was the best, and then eventually it became Facebook.
Right.
But then after Facebook, you realized, I only care about photos. So then you moved to Instagram.
Right.
And then Threads came out. It was the fastest growing app, maybe outside of OpenAI. But now I don't think that got a lot of play. But then ByteDance does. So I can't say it's going to be as easy to put your finger on, is it a good investment opportunity? Because there will definitely be some good ones. But I think it's much harder to say you're going to win. Like we're juggling between what's a better investment. In the last short about Anthropic or OpenAI, actually, you're probably going to do okay if you invested in both.
Right.
Whereas with an app ecosystem, you might need to invest in 10 for one to do really well, and 5 of them will disappear within the next decade.
Yeah.
So I think it is a harder investment case because of the nature of like psychology, and it's more fad driven. Something could really come up and then fail very, very quickly.
Yeah.
So it's tough. Yeah.
I don't know the answer.
Yeah.
That's my take. Like I'm kind of with Clint right now. It's like, this is kind of the thing where it's like, if you go out and build something and then you can just build it. Like that has been a thing kind of in VC, like, oh, you built this company, but this is just like a feature that Google can build in like a month. And like, what's your company worth? It's like not worth anything.
Right. Look at
There's
Zoom.
no value there.
So wait a second, but think about all the companies that failed because of that mentality, or were basically sentenced to death because of that, but ultimately ended up succeeding. Google has failed more times more than we can think.
No, look, there's software companies out there that Google hasn't done that to, right? So but this is, to me, it's like, I think there's, I would say it this way: what's seemed to work in the past is like a level of specificity, right, on a target demographic or a target use case, right, that like the larger platform doesn't want to pursue, right? So, but I don't know what that looks like in the world of an AI and AI agents, and you know what I'm saying? Like to Clint's point, if you can do something with reasoning or some, you know what I mean, some kind of agent that an OpenAI or an Anthropic puts out, like computer use through Anthropic. Like I haven't even really got into that. I've started to dabble, but that seems like so powerful. You know what I mean? And to your point, Evan, like if you have a website and then you can use computer use, man, you can do a lot with that, right? It's like Excel macros for the internet. It's like really cool. If there's a company that does the same thing, it has to be like much, much, much better, I think, for me to pay a fee to do that, right?
Here's a question back to that point. I mean, so we'll go back to the secondary markets, and I'm going to look at Grammarly. Right. Now, for all intents and purposes, Grammarly could get really beat up because the super app, though it's not a super app, but OpenAI or Anthropic could actually do a lot of what Grammarly did, and it was a one-trick pony. Right. So BlackRock was marking it north of $25 a share. Then they marked it somewhere between 15 and 20. Now it's somewhere between 10 and 15, and we've seen offers below 5. So that is a core example of where a better technology can just completely blow them out of the water, and it's not even a one-trick pony. Yeah. So yeah, it's putting that into perspective. That's why I think it's so hard to put your money on the right one, right? Unless we think about, is it just going to power someone else more quickly, and maybe it's a good acquisition target, and that's all it's worth.
Evan, go ahead. What do you think?
I think that's a good example, Nick. And I guess my thinking is that the bigger these companies get, OpenAI is already like a behemoth. You think of the Googles, the hyperscalers, et cetera. Like they just don't have. There's too much surface area to focus on. And I believe that there are some experiences and some apps that just require an intense focus, intense customer, like talking to the customer, really understanding your moat. And at the end of the day, you can't have conflicts. So when you're a startup, you have a blank canvas in which you can attack different vectors of customer segments. You can talk to different customers and try to service people and make people happy in a different way. When you're a big company, not only is it really challenging to do that because you have so many customers you have to service, but you also have a legacy business that you have to protect. This is literally the Google problem. Google was slow to adopt AI because they had a legacy business that they needed to protect. And so I believe that disruption will always be an innate feature of technology and startups and the venture capital ecosystem that we all live in the United States for. And I believe that just because you have big AI companies, I don't think that's going to deter people from trying to disrupt them and build a better experience and win customers.
Right. Okay. So Clint, this is if we were out having cocktails, this would be and I had to play the opposite side. I would say, could we agree it's too early to invest into AI apps, right? But if an AI app emerged and seemed to withstand the test of time, right, and still drive valuation, like progressive valuation increases, that, like, to me, that would be a compelling investment opportunity, right? Like if they're driving revenue, they're driving customer growth, they're continuing to prove that they're carving out, like adding value in the face of AI agents and some of these, then now that makes it interesting for me as an investor. Is that fair? What do you think?
I think that's too late. And again, I know I said I don't think it's a good investment option, right? Because I'm looking at do I think that these applications will exist? Do I think great applications will be built? Absolutely. The question was, do I think there'll be great investment opportunities in it? And I don't know at this point. And my hard answer is no at this point. But if I was going to invest, I would spread a lot of different bets around. I think one of the clearest and probably the only area I would really focus on would be on the medical diagnostics section. Right. And maybe on the marketing front, right? In terms of web page development, landing page development, funnel creation, et cetera. I could see those two applications being very attractive and maybe being a good investment opportunity. But again, I think it's going to move so fast and AI is going to be so disruptive. And we just don't understand how these LLMs are going to act as platforms, right? In order to protect them, because they haven't figured out their business model yet. So I think ultimately you got to just spread a bunch of bets, place them, and rely on the 70-20-10 math. And I think maybe you hit a couple big home runs on the application side, but I'm not very favorable from a thesis perspective. But I said the same thing about crypto, and you've got, XRP now, the third largest crypto. You've got PopCat rallying. You got Dogecoin with huge market cap. So these exponential technologies, you can't underestimate how fast they can grow. I think you just have to have a discipline around it. You're asking me an investment thesis, and I think that's a very difficult thing to answer. I think this is something that you have to almost be a trend follower with. Just spread your bets like VC. Know you're going to lose a lot. Try to cap those losses. If you're a trend follower and you have the ability, like in crypto, to get in and out, then you got to position size well, know your entries, know your exits, know your stop losses, and ride the trend, ride the wave.
All right. So maybe to a certain extent, part of that's going to be knowing the management team well. We've always talked about the Klarna CEO as exemplary here, managing through difficult times and what he can do for that company. So maybe it's a case where you look at Canva and you're like, wow, the management team here kills it. Doesn't matter what the market is throwing at them. They are doing a very good job in this particular space, the app functionality. And it's probably more about that team and their ability to pivot than the technology itself, right?
That's fair. Now, this is going to be one. That's why I keep talking about these AI apps, because this is either going to be a multi-trillion-dollar investment theme, or it's going to be a zero.
Well, I think,
and I don't know the answer right where it's going to go yet.
I do believe that the valuations I've seen for some of the AI apps out there are obscenely ridiculous. And I don't believe that just because you're an AI app, you deserve to have an obscene multiple. Harvey, for example, I know we talked about, like, they're the legal AI. I mean, I know that they have a bunch of logos on their website, but I don't think they're worth $1 billion. Like, I'm not there yet.
Yeah.
Too easy to download another or new app. All right. So here's the best guess. Starting with Evan, then Aaron, then Clint. How many apps are on your phone right now?
I have over 130 apps.
Yeah, you can count it quick. I don't know how to count it quick.
I'm not going to guess. I'm going to go to my settings.
I think I have like 30.
Oh,
But
wow.
Nick, I'm like a weird
Clean.
guy for this because I routinely delete everything off my phone and then like and force myself to add it back in. I actually even thought of going to one of these like simple phones that doesn't have any apps on it at all. Right. I was going to do a flip phone, but then there's no email and I actually really want email. So, you know,
We'll get you a Palm Pilot.
Yeah, like I'm like a weird guy to ask that question to. So sorry to make it more complicated
30.
than what you were looking
All right,
for.
I got well over 100.
Yeah.
I'm in the
Go
same
ahead.
boat. And I don't use half of them by any stretch of the imagination.
Fair point. Yeah,
Not
that's why I
very hard.
deleted. Gentlemen, come on over to this side of the fence. Delete the apps. Delete the apps off your phone, right? I love it. Okay, guys, let's talk AI scaling. So this has been something that's like percolating out there for the last like 2 or 3 weeks. This idea that like I think, well, the general buzz has been like the size of your GPU cluster, your AI cluster, is directly comparable to or correlated to how intelligent your AI models are going to be, right? And how useful they'll be. And there was this, you know, kind of correlation or exponential correlation around the size of the cluster and then the output from the models. That seems to be the buzz is that seems to be kind of tapering off. So as these GPU clusters get bigger and bigger and bigger, the performance of the model seems to be not delivering the same kind of growth that they were seeing historically. So that's put out a lot of discussion about what they're calling AI scaling. So there seems to be, from what I can gather, 3 drivers of AI, and I'll call it intelligence, right? One is the training cluster, the server size. The second is the data, to the amount of data that you're feeding into the models. And then the third is this AI reasoning. So the AI kind of thinks like a human and starts to create tasks for itself and then rip through those tasks, you know, one by one to solve a problem. So, okay. So here's where I'm at with it. I want to just get your guys' thoughts on AI scaling in general. And then maybe we can talk a little bit about the reasoning item because there seems to be some interesting results there. But Nick, go ahead, kick us off, man. What do you think about this AI scaling challenge, or do you think it's a challenge at all?
I think we're probably leaning far too heavily on it. First off, you know, there are a lot of things that we're throwing at AI because we can. And do we necessarily have to? No. And that's how you're just seeing so much compute roll through AWS, which I think remains the biggest, then Azure, second place, and then third place Google, unless the top 2 have switched. And if we are going in that direction, then it's going to go, who's going to win the quantum computing race? And then you have to start thinking about IBM and who some of the players, I think Google's in the mix there, for who can take that. But we also need to see the cost to come down before anyone's going to take bite that off. Because so much money is being spent and thrown at, let's use AI and see what sticks, no matter what the cost of compute. So yeah, if people are not caring about that cost, then this is going to be a problem, right? If we're just going to keep computing and not getting too much significant gain unless we make that quantum leap, if I can call it that, to quantum computing, that's going to be an issue. And that's going to be prohibitively expensive, except for like the biggest healthcare companies and similar to start.
Right. Clint, you and I talk about NVIDIA a lot, right? So if they have, if this starts to happen, that could end up hurting NVIDIA's kind of future revenue forecast. What do you think about scaling?
Yeah. So there is a tweet that I saw Elon Musk or whatever it's called. I guess I still call it a tweet, but a post on X that was released today. And I saw Elon Musk, tagged to it. And essentially said the cost of running GPT-4 has fallen from 36 to 0.25 per million tokens. So that's a 99% reduction for AI costs in just 18 months.
Wow.
So that's a pretty stark decline. And if you think about it, so a billion tokens now cost $250. It's down from 36,000. That's how the compute efficiency is doubled. It's doubling every 6 months. Now training large models cost 10 times less because of the advances we've already seen in hardware and algorithms. I think the big issue is not necessarily scaling on the learning aspects of all that. I think the hardware is going to continue to evolve. It continues to evolve. I think what's going to come down to are two things: infrastructure and data cost. Aaron, I know I shared that paper with you, but ultimately the biggest heist is this data, is our user data, which is being used to train these models and essentially create behemoths from a financial perspective on these platforms. And individuals are not getting paid for that data. So I see that as a big issue that's going to ultimately raise the cost, because people are going to flip out eventually when their data is being used and they're not getting rewarded for it. If we don't start to reward people for it, there's going to be, maybe there will, at least I'm already, ready to get my pitchfork out and torch and start marching. But ultimately that's going to, I think, create a bottleneck for these platforms. The other thing is electricity and infrastructure. We have to have meaningful infrastructure investment in this country, in particular on our grid. We need to deregulate nuclear so that we can move these things up. We've underinvested in all of that, and now that's going to create significant issues, because ultimately the cost of compute is going to come down to the energy input resources. So, or energy inputs. And so I think those are going to be the two key issues with scaling past a certain point. But right now we're proving that we can scale just on those data points that I just mentioned. So those are my thoughts. I think we're making strides. I don't know where that breaking point is, but I think we have to start focusing more on the electricity usage and the data component.
Got it. Evan, what do you think, man?
I just want to say both Nick and Clint had really strong points, and there's elements that I'll probably mold into my response as well, just building off of that. But I agree that we're underinvested right now in the infrastructure to support the scaling. And I do believe that quantum, while I'm a big believer in it, is still a ways away out. We have not made the breakthroughs that I think people even think. I mean, we've heard the same narrative around quantum since 2015. And while we've made strides, it's been definitely not as quick as we had expected. And ultimately, I don't think it's a solution that's going to be in the near term solving our scaling issue here. It goes back to what Sam Altman said, I believe, like 9 months ago, and I think we talked about it here on the pod, where at the end of the day, the world that we operate in is going to come down to the cost of compute, right? Like, we have to decide, okay, well, would we rather use compute to, rewrite my investor email, or would you rather use compute to go solve, like, cancer? And I believe that at the end of the day, we don't right now there's such an inflow of investor dollars going into the infrastructure layer, and then the venture community is putting so much money into new companies and startups that I believe that it's being subsidized right now by investors, hoping that they're going to invest in a company that ultimately builds a great moat. And I do believe that there will be a coming to reality of sometime in the future where people realize, hey, we can't just be subsidizing people throwing money at compute when compute is a resource. And that resource needs to be used properly and efficiently, and we should be using it toward the things that matter for humanity. So I think that just all around, I believe that we will solve a lot of the compute and the scaling benefits without hardware technology. I believe that on the software side, algorithms will have breakthroughs like the transformer. That will happen, especially as more engineering capacity goes into AI development. That is almost a given. The question is does the hardware, the literal hardware, the semiconductors, the energy, the compute, like that, can we get that evolution, or can we get that to happen fast enough to meet the software demands? Because software development and software evolution happens so quickly. Hardware does not move that fast. It is a slow, tedious process that requires a lot of capital and a lot of time and a lot of failure. And so I do believe we're going to hit that sort of crux, but we'll work our way through it, just like everything else in humanity, right?
Yeah.
And even hardware that's being built now is on back order for anything from 6 to 12 to 18 months, right?
Yeah.
We're talking more like NVIDIA and that.
Yeah. Well, there's
you guys are more optimistic than I. That's good.
Well, I mean, the stuff that I've been talking a lot about with people is like, even the AI models that we have today really aren't being implemented in all the use cases, kind of like sussed out, right? In the marketplace. So like, these models are already so intelligent and can be used in so many different applications within a company, right? For example, like Klarna is using it as an example. The companies just haven't done that. So even if it stops today, and there were no longer any kind of more intelligent AI models, the efficiency hasn't pulled through yet, right, to all these companies. So, and then to Clint's point, there's like, in the face of capital constraints or hardware constraints, people are finding ways to make them, more efficient. Like a company, that I love, Grok, right? The chip company, GROQ, they're able to do inference at 10 times faster speed and 10 times less electricity use, so less cost than a GPU model. So if reasoning is a way to drive more value and kind of more intelligence out of the models, or have more applications being used, inference is a great way to do that. And there seems to be plenty of opportunity to ramp up LPUs through Grok to kind of meet that demand, right? So yeah, man, I think I'm with you, Evan. Like, I think humans will find a way to innovate, you know what I mean? And find a way to get it done.
I mean, these are corporations, they're profit seeking. I mean, for example, how many of you on the call here have used ChatGPT 4.0 to answer a simple question? Like, hey, how do you make Caesar salad dressing? Like, that could be GPT 3.5. Like, we're just using the models because that's what's available and what we pay for. But there's a world where we could just make it more efficient. Hey, based on your question, we can route that to the model that is most efficient to that answer.
It's true.
You're making me think back to a few years ago, Silicon Valley, the app that said, "Is it a hot dog?" And it only said, "Is it a hot dog or is it not a hot dog?" It was just one or the other. And it's like,
not a hot dog.
We don't need the latest and greatest technology to do that piece. We could use tech from a year or 2 or 3 ago.
It's true. It's true. I just find it interesting when I hear these companies talk about, AI's been on one path, which has been server size. And now we're starting to, if that isn't true, in fact, hitting a wall, then to Clint's point, data companies or companies that are brokering data could be really interesting, because if that's a way to scale it, right? Or like reasoning, or companies that help drive reasoning at a lower cost, like Grok, for example, that's also an interesting and compelling, investment case as well. So it's just, this is something, because to your point, Evan, there's like billions of dollars going in to GPUs, like just buying GPUs, because that seems to be the thing that's driving improvement. And if this kind of switches now to like, okay, well, just throwing another $5 billion at GPUs isn't going to get us a smarter model. We have to, we need more data. It's like, well, how do we get more data? And then all of a sudden there's billions of dollars going into companies that are, grabbing data from the Clint Sorensens of the world, right? So that they can use that to train like that. That's an interesting business.
A $1 million salaried data scientist with a $100K budget, or a $100K data scientist with $1 million budget for data? Right? Yeah. You need more data.
Yeah. So definitely. I mean, this is the kind of stuff, I don't know, I got my investor hat on lately, right? And trying to see around the corner here on this stuff with AI apps and this AI scaling stuff. Like there's another phase. I just feel it. Like there's another phase coming. Right. So like what can you invest into? Where should you have your eye out to like take advantage of that next wave of things that's coming? Right. Because I can feel like, no, you're not going to go talk to anybody now and they'll be like, oh yeah, this AI thing's not a thing. Like AI's here, like full stop. Right. So now what? So like, you kind of like got the lay of the land. It's like, well, now what? So
pitchforks, torches.
Yeah. Like, and I got to be honest, like I love investing in companies that got $150 billion valuation, but I like, not for nothing, I'd like to buy something that's more like 3, 5, 10 billion instead. Right. So what are the 3, 5, $10 billion companies? So that's the next wave, right? And those things may not be like super obvious to everybody. Like an OpenAI is obvious, right? So I don't know. That's kind of where there's something about scaling. I feel like there's going to be opportunities
and
there.
I think one thing I do want to point out from the secondary markets perspective, right? Because this is all about pre-IPO, is that those opportunities are abound now, where previously it was only the top 10, the top 20, the top 50 companies were highly accessible, but now we're seeing more and more to that earlier stage. So you can have those opportunities to get a 5-bang or 10x type return, as opposed to investing at, an already exceedingly high valuation that you're going to get a nice double or triple on. But more opportunity, more, only a double or a triple, right? But
I just gotta laugh at like calling it like, oh yeah, these early stage $3 to $4 billion companies,
right?
It's just like, what are we talking about here, guys?
It's wild.
Early stage.
It's wild. It's wild. But that's what's happening.
Aaron, with your investor hat on, and actually I want to ask everyone else here. So did you guys hear about the SoftBank $1.5 billion tender to OpenAI?
Yeah, I heard.
So what is this? Like, so OpenAI employees are just getting billions and billions of dollars. Is anyone here concerned about the incentive structure here? Like, these employees are making more money.
No, they already left. They're all left already. That's why these people are all billionaires. Like, why do you want to work for anybody? You're gonna start your own company.
Well, that's what I don't understand. So, like, why is everyone excited to put money into OpenAI when all of their talent is rich and can go buy yachts and not work anymore? Like, this is concerning to me.
New people come in. That's all.
But they're not as
made
good.
$1 billion yet. Well, maybe. I mean,
maybe,
come on.
maybe not. Like,
I think there's a lot of smart people
good enough.
out there.
We don't need people.
I mean, that could be true. That would be wild. But I just feel like if you're like a 10x engineer and you're sitting there being like, do I want to work at OpenAI at $150 billion or a $200 billion valuation, or do I want to work at Anthropic with a $40 billion valuation? All of us wearing our hats on are sitting there saying, well, we know where the money is.
This is something I talk about all the time with my financial advisor clients, because they're all like, everyone's blowing out of OpenAI. I'm like, listen, what would you do? You're worth $1 billion, $500 million. Are you going to go into work every day and like work for somebody? They're like, hell no. I'm like, I'm going to go work for myself. Like, that's what they're doing. To me, it's not a testament of like whether OpenAI is a good place to work or not, or the work that they're doing is good. Like, there's a lot of discussion about that. Like, the place is flying off the rails. It's no good. There's infighting. It's not that. Those people made so much money. They're rich. They're done. They're done. Their kids' kids are done. Their kids' kids' are done. The generational wealth, man. You're not going to go into an office and work for somebody else when you got $500 million net worth. And to your point, like, companies are doing tender offers and you get liquidity.
Yeah.
I'm out. I'll go start like the CTO.
So why does anyone want to invest in that company?
Murdy, she's starting her own company now. She's starting her own AI company.
Yeah. To a smaller extent, you could say the same thing about NVIDIA, though. Right. But actually, if you look at the tenure of a lot of the employees at NVIDIA, yeah, albeit it's not the same growth trajectory as an OpenAI, but the tenures are really long. You know, people have been there steadfast for ages, working through the growth and, you know, the 1000x, the 5,000, sorry, the 1,000%, 5,000% type returns.
Well, that's exactly the thing that I'm looking at and I'm concerned about, because I believe if you look at the best companies, the best technology companies, they have really nice longevity of really senior, exceptional talent, and OpenAI has churned that talent, and that is a negative signal.
You're not wrong. You're not wrong.
And I agree with you. Like NVIDIA, like NVIDIA, the employees there must be sitting there being like, we're building the future. We're moving ahead. Like, we're in it for the long game. It doesn't feel like the OpenAI employees have that mindset. And that if you're an investor in OpenAI and you're sitting there being like, well, I need to figure out how this valuation from 150 billion is going to go to 300 billion, and all the talent is walking out with the cash that I put into the business. Mm-hmm. I don't know. That's a little concerning.
You think it's because OpenAI had a binary, like, holy smoke, flash in the pan, we got it, you know, and here we are. And NVIDIA was a gradual building upon building upon building upon building.
Yes.
You know?
And it's also like the revenue's there.
Counterpoint. I would also not like to invest into a company where the top 25 employees are all billionaires or what is that? $100 million plus. Yeah, centimillionaires. Like, that's not. Like, also, I mean, come on, like, you're like, it's Friday at noon, you're like, just gonna go to my yacht.
Let's go play golf. Go to Clint's house.
Like, why am I doing like,
exactly?
This guy just gets done yelling at me about something. Like, why am I? Forget this. I'm just shutting this thing. I'm gonna go hang out with my kids. Like, that's just, you know what I mean? Like, I want the person in there that's like hungry, that still has something to prove, that, like, you know what I mean?
I agree.
Like, we're all humans, you know, and you get generational wealth and all of a sudden, like, you're just paradigm shifts. You know, it doesn't matter how good you were up until that point. Now that you got that money in your bank account, like, you just see the world differently, you know?
I think this is the first time we're really seeing this, though. And I believe investors might be in for a bit of awakening.
Fair point.
when they realize.
Listen, you're not wrong. You got to keep an eye on it. Like, you got to make sure that the people they're backfilling are just as talented or have potential to be just as talented. Right. And they continue to deliver, like, results.
And also the knowledge compounds too. Like, if you're churning your entire workforce every 3 years, like, the knowledge, like, every year the people are there, that just compounds, and the experience compounds, the knowledge compounds, and
you're not wrong.
You need that. Like, Google's got people that have been there for 25 years.
Can we just agree, though, that it's not like the company itself has done anything wrong, making people very, very wealthy? It's not like the product's all messed up or anything. It's just, you know, it's not like people don't want to work there.
I think there's been a lot of change. A lot of people that got on with the original vision I can't say that that's all one way, right? A lot of people
Fair.
are on with this nonprofit vision. If we're going to do this, bring the best developers to the table, people with an altruistic mentality. They wanted to really do something to impact society in a
Fair
positive
point.
way. And then you switch to a profitable venture
Yeah.
after raising a tremendous amount of money under Microsoft.
Yeah. But I also too, I mean, I love the dichotomy of maybe that's the right word. I'm doing this because I just want to do the right thing for the world. But also too, I want a lot of stock in the company so that I can sell it for hundreds
You
of
don't need a
millions of
lot.
dollars.
You don't need,
Right?
you don't need a lot of stock. You only need a little bit of
Firmly
stock.
in the have your cake and eat it too, right? Category.
Very true.
All right, fellas, let's end it there.
See
I
you guys.
appreciate you guys. This is good
Thank y'all.
catching up. All right.